for the gold that they took? The answer was it was a gold certificate, which is still on the balance sheet. But if you do the math, it's not difficult. It's on the books at $42 an ounce. If you revalue to, 20, just the market, it's around 26.50 today. And multiply it and figure out, well, how many ounces do you need to back up that certificate? The answer is almost exactly what the U.S. holds, which is 8,133 metric tons. Just convert that to ounces. So query whether the Treasury is in effect legally prohibited from selling any more gold because it has to keep that amount to back up the certificate. That's a monetary mystery, but
in today's news recap, UBS stays bullish on gold for 2025 as central banks fuel demand surge. UBS predicts gold's 2025 rally could defy rate cuts and a strong dollar, fueled by central bank demand and economic uncertainty. UBS, the Swiss multinational investment bank and financial services giant, has offered an optimistic outlook on gold for 2025, despite the metal losing some momentum in December following the U.S. Federal Reserve's hawkish stance during its policy meeting. In 2024, gold surged by 27.6%, marking one of its strongest annual performances in over a decade and surpassing the S&P 500's returns. While the Fed's tone caused short-term headwinds, UBS analysts remain confident that gold's upward trajectory can continue into the new year, supported by structural economic factors and ongoing central bank demand. We believe gold can build on its 2024 gains. Although U.S. rates may fall less than expected, they are still on track to decline. UBS's chief investment office highlighted central banks' significant role in driving gold demand. The forecast reflects increasing diversification and de-dollarization trends among global central banks. Despite potential challenges, including fewer anticipated rate cuts and a stronger U.S. dollar, UBS maintained a positive stance. Reflecting the shifting economic environment, UBS lowered its 2025 gold price forecast by $50 per ounce. The bank now projects gold will reach $2,850 an ounce by the end of 2025, down from its previous estimate. Despite this downward adjustment, gold was trading at $2,639 per ounce as of last week, indicating UBS still expects the metal to rise, albeit at a slower pace than initially anticipated. Before we dive into the best clips of the week, don't forget to smash that subscribe button and check out our pinned comment for exclusive VPN offers. Protect your online privacy with NordVPN, the fastest, most reliable service to secure your data and keep prying eyes away. Plus, if you're a stacker looking for truly independent market insights, visit goldsilverstacks.com for the Stacker's Handbook, a comprehensive guide packed with strategies to safeguard your financial future and take control of your wealth. And by popular demand, we've launched our print-on-demand gear for gold and silver stackers. From stylish apparel to unique stacker-themed accessories, it's the perfect way to represent your passion for precious metals. Premium quality, shipping worldwide.
Gold's had a great run recently. Yeah, we all know that. We can look at the tape. It's hit a series of all-time highs. It ticked up to 2,800 per ounce. It's off that a little bit, but that's normal. Nothing goes in a straight line, so you have ups and downs. But gold is, in the vicinity of its all-time highs. So exactly, people say, gold, went from 1,800 to 2,200 and 2,700, 2,800. And I said, no, what you're witnessing, that is true from a data perspective, but what you're witnessing is the collapse of the U.S. dollar. Now, people ask me all the time, partly because of my book, Currency Wars, and for other reasons, how's the dollar doing? And I say, well, it's getting a lot weaker. They go, wait, what are you talking about? The euro is down to 106 and the yen's pushing, approaching 159, and the yuan is blowing through 722, and the Bloomberg index is 105, heading to 106. Looks like the dollar is as strong as ever. I say, well, it depends what you're comparing it to. One of my favorite jazz songs, was a great live version performed at the Montreux Jazz Festival in 1969, but the song is called Compared to What? And when people say, how's the dollar doing? I say, compared to what? Now, that's a little bit my law school training. You answer a question with a question. But the point is, if you're comparing it to the euro, yes, the dollar is very strong. Same thing with sterling and Canadian dollars and a lot of other currencies. But if you use gold by weight as your measuring stick, then the dollar actually is crashing. So the question is, what is your metric? And I prefer gold for a couple of reasons. It's not that I'm a gold bug. Yeah, I own gold and I recommend it, but I'm pretty hard-nosed about valuation and how much you should have and all that. But when you look at DXY, which is the leading U.S. dollar index, and there are others, Bloomberg and so forth, you're comparing currencies to currencies, dollars to euros, euros to yen, and so forth. But they're all in the same boat. I say the vessel sank. They're all in the same lifeboat. They may survive, but they may all sink together. But they're not going their separate ways. There's not going to be a world where the dollar has collapsed by some measure, and everyone says, "Oh, get me the euro," or get me the Aussie dollar or whatever. They're all going. If there's that kind of stress, they're all going to fall together or be sustained together. So those differences, they're important for currency traders. They're important if you're in the import-export business. Or if you just want to speculate, there are reasons why you would pay attention to it. But as a measure of trust or reliance or faith in the dollar or dollar strength, you're comparing like to like, and you're not really getting an objective measure. To me, gold is that objective measure. It's not a currency. It's a form of money. It's a store of wealth. Serves those roles very well, but it's not something it's not like 1910 where I could get on the steamship in London with a purse of British sovereigns and get off the boat in Shanghai and spend them like they were money. They were money. That was absolutely true in that day. The sovereign was a quarter ounce, 8 grams, basically. So you can't do that today, but as a store of wealth and a form of money, as a monetary asset, that's what it is. But it's not a central bank currency, and it's not a liability. If you study the history of money, and I know you have, most money, various money at various times, is basically the government giving their debt to a bank and the bank issuing bank notes, which is just bank debt. I mean, I tell people, Americans, but I think it's true around the world, take a 20, in our case, a $20 bill out of your wallet or, 20-pound note or whatever, and read it. I was taught that in law school. Read the contract. There's a contract between the government and the citizens, and it says Federal Reserve note. Well, where I went to law school, a note is debt, and indeed it is. Go to the Federal Reserve website and look at the balance sheet, and you'll see all the currencies on the liability side of the balance sheet. So most money is basically governments giving central banks their debt, and then central banks giving them something you can spend. Gold is not issued by a central bank. It's not a liability. It's not a note. It's an element, atomic number 79. So to me, it satisfies the requirements of an objective, if you will, an objective measure of value that's not more the same. So again, just to summarize, when I see gold going from 2,000 to, it'll make its way to 3,000, you can call it a 50% increase, but you can also call it a 50% crash of the U.S. dollar.
In today's news recap, gold demand in India slows, Lunar New Year fuels interest in other hubs. Gold discounts in India rose this week as consumers refrained from buying as local prices hit a month's high, whereas the upcoming Lunar New Year festival stimulated gold buying activity in other major Asian markets. Indian dealers offered a discount of up to $17 an ounce to official domestic prices, inclusive of 6% import and 3% sales levies, up from the last week's discount of $14 an ounce. Prices are high, so buyers are holding off on purchases. Anyway, the inauspicious Car Mass month in Hindu calendar is still going on, an Ahmedabad-based jeweler said. Jewelers were on the sidelines due to volatility in the Indian rupee and overseas gold prices, said a Mumbai-based bullion dealer with a private bank. International spot gold prices hit 4-week highs this week. In China, the world's top gold consumer, dealers quoted discounts of $2 per ounce to $9 premium on spot rates, down from the premiums of $4.50 to $10 charged last week. The year of the snake approaches, arguably an auspicious year and a perfect backdrop for further gold purchases. Independent analyst Ross Norman said Chinese investors will be encouraged by news that the PBOC have added gold to its reserves for the second month in a row, which may suggest the current price reflects fair value. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps. And check goldsilverstacks.com to get your gold and silver gear, from t-shirts to hats, designed by stackers for stackers, premium quality, shipping worldwide. Let us know if you'd like any specific designs, and remember, mine is bigger than yours.
To adjust for inflation, gold has outperformed stocks. This particular study was 25 years, okay, a quarter century from 2000 to 2024. That's not a small sample. That's the other thing that drives me crazy when people do comparisons. I'm like, well, you have a 2-year time series. Can we do 10 years at least? This was 25 years, which I thought was interesting. And it said gold and other commodities have outperformed stocks in the last quarter century when adjusted for inflation. So first of all, your point is well taken. Gold is robust to that. But I'm calling gold the everything hedge. People, I think when you say it's an inflation hedge, which it is, you're not giving gold enough credit because gold has done well in the past year. Inflation is higher than it has been for a while, but it's not. It was screaming in 2022. This is U.S. data. I know it varies by country, but pardon me. It was it's been higher than it should be, but moderate for the past year. But gold is surging anyway, so it tells you there are other factors in the gold rally other than just inflation. So is it an inflation hedge? Yes, but to say, well, gee, I'm going to buy gold when inflation comes along. Okay, but you might be missing out. In fact, the data says you are missing out. It's a hedge against geopolitical uncertainty. It's a hedge against sovereign risk. I happened to have shared an office with Myron Scholes for 6 years. He was very generous with his time. He used to come into my office on slow days and give me, the way I would ask a dumb question and he'd give me like a private tutorial. So I see options in my sleep, but part of the Black-Scholes, he won the Nobel Prize for the Black-Scholes formula, options pricing formula, but part of it says the U.S. Treasury bill is the risk-free rate. You need the risk-free rate, past performance. There's a little bit of Ito's calculus thrown in for good measure, but the risk-free rate is a key element of that. My question for Myron or anyone, I haven't seen Myron recently, but would be, ask the Russians if they think U.S. Treasury securities are risk-free. The U.S. not just in 2022, at the beginning of the special military operation in Ukraine, we froze $300 billion worth of Russian-owned, lawfully purchased U.S. Treasury securities. Now we're in the process. Freezing is one thing. The U.S. is very good at that. Ask Iran and a bunch of other places. But now we're in the process of stealing them, working with most of those securities, by the way, 200 billion of the 300 billion of Russian-owned U.S. Treasury securities are on the ledger at Euroclear, which is, the largest clearing firm in Europe, which has $40 trillion of assets on its ledgers. But we're in the process of converting 50 billion of that into as collateral for a loan to Ukraine to perpetuate the Ukrainian war. So here, Russia earns the reserves lawfully by selling energy and other exports. They lawfully buy U.S. Treasury securities. They're in a war in Ukraine for a lot of other reasons, and the U.S. is stealing the assets to finance the war against Russia. So again, don't talk to me about risk-free rates. There's risk everywhere. Why has Russia not collapsed? I mean, actually, the Russian economy is outperforming the U.S. economy, has since the beginning of the special military operation. Russia's biggest economic problem right now is they can't find people to fill all the factories. I mean, their economy is booming, so they have an employment issue, but it's not unemployment. It's They can't find enough workers. They're doing extremely well. Why has the economy not collapsed? Well, there are a lot of reasons, but one of them is Vera Nabiullina, who's the head of the Central Bank of Russia. I always describe her as the only central bank in the world who knows what she's doing, put 25% of their reserves in gold, physical bullion in Russia. So at the, going back to 2022, round numbers, Russian reserve position was $600 billion, but $150 billion of that was in gold bullion. And then, of course, much of the rest was in treasury securities. But the reserve position was never wiped out because they weren't completely, fortunately for them, not relying on the U.S. Just an ironic footnote to that, because of the impact of U.S. sanctions and because of the rally in gold, while the U.S. is busy, stealing the Russian treasury securities, Russian Federation has booked a $50 billion mark-to-market profit on the gold, because with a given quantity of gold, when gold went from about 1,800 or so, now close to 2,800, take that increase in dollar value, and the gold reserves have gone up $50 billion. So, so much for depriving Russia of its reserve positions, actually making profits on the gold. So, but the point being, there's a case where it had nothing to do or little to do with inflation, everything to do with geopolitics. And that's why I call gold the everything hedge. It hedges a lot more than just inflation.
Do you agree with Jim Rickards, or do you think the markets will continue to boom in 2025? Are you still stacking gold and silver, or are you waiting for a big dip to buy more? Share your strategy with the stackers in the community in the comments section below. We'd love to hear your thoughts. And don't forget to check out goldsilvermerch.com to grab your gear and represent your passion for precious metals. Thanks for watching. And now check this video right here because you'll love it. I'll see you on the other side.